So Ralph, morning. Thank you for joining us. The LTRO2 has been announced. The size is now 530 billion euro. Your reaction to that, and what do you think it means for global markets and especially equities?
I think we expected maybe 500 billion around there, so it's about 30 billion more, which isn't a significant amount. So I think the markets are going to take this as hitting its target. I think overall we're looking at not enough money to make a significant difference within the economy in the short term, but enough money to actually get some of the banks that are slightly worse off, get them going in the right direction so that they can support themselves.
According to you, what could be implications of this LTRO? Because in terms of size and in terms of proportion, 530 million euro, that's about $750 billion. That's large and that's huge.
The governments want the LTRO to actually help the economy move forward, but in fact that's not what's going to happen. What's going to happen is that the LTRO is going to be a foundation of keeping the banks afloat. There's a number of banks out there that are in trouble, and the LTRO is going to do that. The banks will not be putting much of that money into the marketplace simply because of demand. There's just not enough demand for loans out there that will actually justify using that money for the loan portfolio. So the vast majority of money will just be for safekeeping and to meet regulatory requirements.
Hi, morning. So how do you read into the fact that there were 800 bidders for the LTRO2, and is this a sign that there is strength to come into the financial sector?
The biggest surprise about the LTRO is the number of bidders. 800 bidders is actually much higher than most people expected. We didn't feel that the bigger, the more well-established banks were actually going to take a significant amount, and we actually thought a lot of these weren't even going to bid simply because there's no place to put the money once they get it. But in fact, that's not what happened. All the banks have gone in for the cheap money, and we're very much looking forward to see where they're going to put it, because a lot of banks can't put it in sovereign wealth simply because their investors won't allow them to do that.
Raj, so do you believe that post the move there will be more confidence in European bank bonds and sovereign bond spreads as well will be brought down, which can now lead to lower downgrades of banks as well as countries?
I do think that this amount of money will help the downgrade situation with the banks in Europe, because some of the banks were on the cusp of failure, and this money is certainly going to help them get through that. So I think it's going to have a positive effect on the overall banking industry. In terms of sovereign wealth, I'm not so sure. And I'm not so sure simply because a lot of banks are not being permitted to actually buy more sovereign wealth. Their investors have said enough is enough, don't take the risk. So I'm not sure it's going to have a huge effect on sovereign wealth issues.